Hello, good morning, and welcome to our market breakdown with Legacy Capital, which is focused on navigating us through from respect to what we should be expecting as far as the week is concerned. If you must know, today is the 30th of March 2025, and it will run through the week. The trading week will run from the 31st of March 2025 to the 4th of April 2025. If you are just joining us and you have not subscribed to our channel, please make sure you subscribe. Also ensure that you like and you comment on our videos, and of course hit the notification bell so that anytime we drop a video you should be the first to be notified, so that you move together with us as we move with the market. On the Monday tomorrow, the first thing we'll be having will be the manufacturing PMI for the CNY. I've filtered the fundamentals, focus on the high impact fundamentals. And on Tuesday, Monday, we'll have manufacturing PMI, German prelim CPI that will affect the Chinese yuan and the euro. So on Tuesday, we'll have the Australian dollar being affected by the cash rate and the RBA statement at 4:30 a.m. And we'll have the ISM manufacturing PMI and the job openings for the United States dollar at 3 p.m. We'll also be having the ADP non-farm employment change at 1:15 p.m. on Wednesday, which of course will be preparing us for the almighty NFP on the Friday. And of course, on Thursday, we'll have the CPI for the Swiss franc, and we'll have the unemployment claims for the United States dollar at 1:30, and we'll also have the ISM service PMI for the United States dollar at 3 p.m. And of course, on Friday, we'll have employment change and unemployment rates for the Canadian dollar, and of course, we'll have average hourly earnings and the almighty NFP for the United States dollar that will be accompanied by unemployment rate. And at 4:25, Jerome Powell, the Secretary of the Federal Reserve, will be speaking. Of course, we have always seen the impact of high impact news in the market. Many accounts are always blown, and of course, many millionaires too are blown. If you are not a fundamental trader, you should pay special attention to the time or the schedules of fundamental news. And if you are a fundamental trader, you already know what happens when the forecast or when the actual is greater than the forecast, less than forecast, how it affects your favorite currency pair. If you don't know and you want us to guide you, of course we'll be dropping a video. You just need to indicate in the comment section. From there, I want us to look directly at the Great Britain pound. With the Great Britain pound, this is what we have on the Great Britain pound. We have, of course, weekly time frame. What we should be doing, or our focus with the weekly time frame on the Great Britain pound, would be to identify our key levels with respect to the current price in the market, which of course is the current price in the market, which of course is 1.2 9331. Of course, with that, if you look critically, we have our resistance zone here, and of course we have our support below at this level. So with respect to this price in the market, these are the two zones we'll plot on the GBPUSD on the daily time frame. From there, we can move to our daily time frame. When we move to our daily time frame, we'll still plot our zones with respect to this price action. When we move to our daily time frame, we'll still plot with respect to the price, the current price in the market. So on the daily time frame, what do we see? Which zones can we see that have acted as support, have acted as resistance? If we care, we can take this to be a resistance zone. Can take that to be a resistance zone, or if we want to focus on price at this level, we can maybe bring it a little bit down to this zone. Then we have this zone, we have this zone, which of course is good. Then if we want to look at the areas that have acted as support, then maybe we can work on something here. We can work on something here. 1, 2, 3. Yeah, this is a good zone. We can decide to change the daily time or the daily key levels to red while we maintain the weekly to blue. So So we know that, okay, we have our daily zones and then we have our weekly zones. From there, we can move us to 4 hours. And moving to the 4 hours, what you should put in mind is that if you spot a supply zone on the daily or a weekly time frame, it becomes more effective for you to trade it. There is a high probability that the market will respect it. So on the 4 hours, you want to look at your demand zones with respect to the current price action. And I always prefer we work with respect to the current price action, because there is no way price will just skip from there to go to another zone without respecting it. So if we look at this critically on the 4 hours, we have a base here and we have a demand zone here. So there is liquidity seated here. So there is a high probability that if the market is retracing, this particular demand zone might not hold it. It will clear up the liquidity to push to the demand zone here. So if to say that you are to maybe identify your demand zone there, what you should do is that you just take maybe your order block, and then you can always keep it, and you know, okay, this order block on the 4 hours, of course, it matches with the key level that you have identified on the daily time frame. And if you feel that you will maybe forget it, you can just maybe label it, just put there your 4 hours OB. 4 hours OB, and you're waiting for the market to get to it. But one thing I want you to understand is that before the market gets down, or before the market retraces to the 4 hours other block that we have identified, the market will have to break through this area that has been acting as support. So when you're entering the market, or when you're doing your analysis on the 4 hours, you want to see into it that the market breaks this zone. When the market breaks it, that's the first confirmation that, okay, the market can push down. Then when the market now retests it, that's when maybe you can be looking at the possibility of trading. The market might retest the exact zone, or the market might push to cover any fair value gap that we see there before retracing. But when the market breaks it, it's the first confirmation that, of course, the market will be selling. If the market retraces to retest it, you look for a convenient entry based on your best entry strategy, fair value gap, supplies, or whatever. Then you use it to enter the market, and you expect the market now to push into the 4 hours of that block. If the market pushes into the zone, good and fine. But now, if the market fails to push into the zone when the time the market is opening, one thing that should come to your mind is that first, when the market opens, there is a possibility that the market can test this zone. Then from there, it pushes back to the 4 hours key zone and maybe break it to move to the weekly key zone that we have identified. It's a possibility. If it fails to break this zone, then we should be expecting to clear out all the liquidity above this zone before we know what will happen in the market. But now, if the market moves to that zone and then actually breaks it, if the market moves to this zone, breaks it, then we should be expecting to see a retest, and then maybe we take a sell position to see that the market gets into the 4 hours of the block. That's what we are actually seeing on the 4 hours with respect to price at the level of 1.29331. Then from there, now we can maybe move to the 1 hour time frame. Maybe on the 1 hour time frame, we can see that the market is communicating with us more clearly. On the 1 hour time frame, you'll see that, okay, the same level we have plotted that the market has to break it. The market has failed to break it 1 through 3. 4 times, so the market can push to it. For us to confirm that the market will actually drop down, the market must break that zone. If the market doesn't break that zone, we cannot take a sell position. We cannot take a sell position. If the market retraces to the zone and maybe clears out the liquidity that is seated below this level, and then maybe retrace back, then maybe we can take a buy position, hoping that the market will get up to this level. That's how we look at the market on the 1 hour time frame. But when you look at it on the 1 hour time frame, you know that, okay, by the time the market breaks this, the market can retrace from this base, or we can retrace from this base, retest where it gathered, or the momentum garnered from to break it. So that is what you should be expecting with GBPUSD as far as the 1 hour time frame is concerned. And please, when you do your analysis, make sure you confirm you're entering either on your 15 minutes, 5 minutes, or 1 hour time frame, so that you have very limited number of pips as risk. Good luck and enjoy the week. Don't forget to drop your favorite pair in the comment section so that we can look into it in the future.